Now, let's continue with a keynote speech on the state of crypto 2026. And I invite on stage Hunter Horsley, who's CEO of Bitwise Asset Management.
Good afternoon. Excellent, excellent. It's wonderful to be with you all. I'm based out in San Francisco, California, so I flew 12 hours to be with all of you, and it's been absolutely wonderful. Thank you to Daniele and all of the organizers. This is an exceptional group of investors, so thank you very much. My job in the 15 or 20 minutes that we have together, I think you've heard some great discussion of digital assets and tokenization. I think that my job, in hopes to be useful and not painfully boring for all of you, is to zoom out a bit and talk about the big picture of what's happened over the last 6 months, what is going to happen over the next 6 or 12 months. So that's what I'm going to attempt to do. How does that sound to you? Good? Okay. All right, let's see if this works. A little bit of, by a show of hands, could you raise your hand if you've heard of Bitwise? Wonderful, wonderful. This is the rundown of the firm. We are one of the largest asset managers in crypto in the world, over 200 professionals. Across several countries. Actually, Fabio, Flavio, and Brad, do you mind standing up for a second? So Fabio and Flavio work with clients, portfolio managers in Italy. Brad leads our business in Europe, and if you haven't met Fabio or Flavio and there's something that we can do for you, you can tell them whatever you want, and their job is to do it for you. Thank you, guys. We've been in this space for 8 years, which is a lot. Bitcoin was $3,000 when we started. It goes up, it goes down. We've been here for all of it, and our role is our clients, which include the largest banks in the world, sovereigns, endowments, very large asset managers, billionaires. They're all very smart. They're all responsible and looking after a lot of money. But they're all very busy, and this space can be very confusing and tedious. And so our job is to help them navigate it and access the pieces of the opportunity they want to access. Okay, that's enough about Bitwise. We do a lot of things for clients. We have ETPs. I'm delighted that 5 Bitwise ETPs are now listed on Borsa Italiana and available to financial professionals. Just recently, separate accounts, staking, on-chain things. You could ask Flavio or Fabio about that. That's enough about Bitwise. Let's talk about the state of crypto in 2026. I'm going to start by giving you a very old quote from Winston Churchill, which maybe you'll recognize. 2026, it's not the end, it's not the beginning of the end, but it is definitely the end of the beginning. It's no longer early in crypto. And we're entering a new chapter now, which I'm going to talk about. Why is this happening? This is an image of a survey that we've run for 6 or 7 years to hundreds of investment professionals. And one of the questions is, what's preventing you from investing in this space? Can you guess the most popular answer? The most common answer? You don't have to guess. Every year, the same issue preventing even investors who have a lot of conviction in the opportunity set from feeling that they can engage with this space. Well, that has changed. People were concerned about, in the US, and forgive me for some US-centric references, were concerned about this individual, Gary Gensler, the chair of the SEC, banning crypto in the US. They were concerned about a president being elected who might ban crypto in the US. This is from 1933 when Franklin Delano Roosevelt seized citizens' gold. But that changed very recently. In 2024 in the US, the SEC allowed regulated ETFs for accessing the asset class. And then with the election of the Trump administration, it changed very dramatically. And this is a chart from JP Morgan, and you can see Bitcoin's price in purple. So things have changed. Some more examples. Maybe you've seen, it's hard to avoid President Trump's constant tweeting. We don't have to discuss President Trump in general, but as it pertains to crypto, very intent on making sure that it's a successful asset class, which you can see here. But it's not just President Trump, and he's not the most important thing for crypto. Here you can see the chairman of the US SEC announcing a commission-wide initiative to modernize the securities rules and regulations to enable America's financial markets to move on-chain. That means move onto crypto blockchains. This is the Secretary of the Treasury in the United States a number of months ago saying how important it is that the Genius Act, which is the stablecoin law, pass, and that if it does, that stablecoins could grow over 1,000% in less than 4 years. It did pass, and here you can see the voting registry. It passed in a bipartisan vote of both Democrats and Republicans, one of the most bipartisan laws signed in the last decade. And then, of course, in the private sector, even those who used to say it's a silly space, it's a space for illicit activities, have changed their minds. And everyone in business is allowed to change their minds. And indeed, it's happening quite frequently now. So we are no longer in sort of the crypto that has been in headlines for the last 10 years. We're entering a new stage of crypto, and the new stage of crypto is marked by the opening of regulatory clarity, and therefore the possibilities for institutional managers, institutions themselves, and others. If people are familiar with this, I don't know if people have seen this before, but this is a model from a book by a Stanford professor on the diffusion of new technology. It applies to PCs, it applied to the internet, it applied to mobile and cloud, and I think it's a mental model you can use to think about crypto. It's often referred to as Crossing the Chasm, which is the name of the book. But where we have been is on the left, which is early adopters, people who are passionate, people who love the details. And where we're going now is we're hopping across to the mainstream, which is people who are interested, but they don't have time or interest in knowing every detail. They just want a safe, reasonable way to participate. You could think about it when you bought your laptop. Maybe you don't know how a CPU works. The first people who bought laptops or made laptops did know how the CPU works. It's a natural part of technology going mainstream that we are now entering the phase where more people are going to participate in crypto, but need more simplification, and regulation is facilitating that. So that's the high level of where we are in 2026. And if you take one thing away from the conversation today that I hope winds up being useful to you, it's that things have changed. And now I'm going to illustrate a little bit about what to expect. So I'm going to talk about 3 drivers or themes that you can look for in 2026, things that are coming, and hopefully give you some context for this new regime of what's happening in crypto. The first is probably the most intuitive and familiar. Crypto is rapidly being recognized as an institutional asset class. It's been around, but it hasn't heretofore been acknowledged as an institutionally addressable asset class, and that's changing in 2026. And I'm going to share a bunch of examples with you. And my hope is that maybe one of these examples is useful in your conversations or your investment committee or your thinking. I know that you all are part of some brilliant institutions. Just in the last few months, Mubadala, excuse me, and Audic have put Bitcoin in their portfolios. There are now about 20 sovereigns or central banks that have deemed it institutional enough for them. Many of the leading endowments, clients of ours, have put it in their endowment portfolios. The endowments, of course, early to alternatives. In the case of Harvard, which you see referenced here, they now own both Bitcoin and Ethereum, institutional enough for them. Bank of America, which now has about $3 trillion in assets, just in January, so just this year, green-lighted access to Bitcoin for all of their wealth management clients and for private bankers and advisors to put their clients' money, for which they're fiduciaries, into portfolios. They approved the Bitwise Bitcoin ETF, and there are another 5 banks that manage over $1 trillion of wealth that have approved Bitwise products and greenlit their wealth managers putting it in portfolios. Another $1 trillion bank also approved the Bitwise Bitcoin ETF just in January, which is weeks ago. This is happening as we speak. Of course, leading economists commenting on the asset class and its role in the current macro environment. This I thought might be interesting to people. This is a breakdown of reported ownership for one of the Bitcoin ETFs. And the main point here is that it's not just one type of investor. It's not just all of us in our personal accounts. It's not just hedge funds or just financial advisors. There's material ownership across a broad cross-section. This is, of course, just public reporting for one product, but hopefully gives you an impression for the rapidly growing breadth of institutional action in this space. We asked, this is from the survey that I referenced earlier, we asked wealth managers, which in the US manage about $40 trillion, much more than mutual funds or hedge funds, if they're allocating their clients' money for which they're fiduciaries into crypto. This is what they said in response. Of course, there's voluntary response bias in surveys, so maybe it's not quite 32%, but I think that the interesting thing here, rather than the number, is the trend. You can see several years of the survey results, and you can see a pretty clear trend. We also asked them, because crypto prices have been down over the last 4 months, though I'll tell you, in 8 years, not the first time that they've been down, and it won't be the last. We asked them, crypto prices are down. Are you going to sell? Are you going to buy more? Are you going to sit and hold? This was the result here. About 99% saying that they would either hold or increase their position amidst markets being down, with just over half looking to increase their position. Last year, Bitwise took in about $3 billion of new assets, and so far this year we've taken in about $600 million of new assets. So here's some data points around investors' views, even just recently with the market, in terms of what they plan to do with the asset class. And then most recently, did anyone see this interview? This is from, if you're familiar with MicroStrategy, Carlo, maybe you saw it. If you're familiar with MicroStrategy, they have a conference every year. And this is the longtime executive at Morgan Stanley who has been appointed by the co-president of Morgan Stanley as the head of digital assets on stage. She traveled to go be at MicroStrategy's conference and shared that they're going all in on the crypto space, including custody, access and wealth management, new investment management products, and access in retail brokerage. And that was 2 weeks ago. I gave a lot of specific examples. This is what it looks like on a table across many leading institutions globally. So I'd be remiss. You all have many important things to juggle every week. We have one important thing, which is to be on top of it and what's happening in crypto, and then to provide that information to professionals like you. And the punchline here is that there's a lot happening specifically right now in 2026, and that the space is being recognized. It's not really a conversation or a debate, but in fact is being recognized as an institutional asset class. So that's theme number one, a driver that I would look for this year that will continue to drive the asset class forward. Prices higher will continue to drive headlines, and I would expect to be surprised on a pretty regular basis about leading institutions who are absolutely regulated, they're absolutely fiduciaries, taking actions in this space. I've been surprised. We've been around for 8 years. The second topic that I thought I'd cover, which I expect will be a driver this year, is capital markets moving on chain. What does that mean? If you think back to the securitization of mortgages, you think about the electronification of markets instead of open outcry and everyone on the exchange floor. Now computers are handling securities transactions, transfers, settlements. Well, it's changing again. It's a pain in the butt when it happens, but it's happening anyways. The internet is here, and blockchains are now getting adopted as new transfer and settlement rails, and that's what capital markets moving on chain refers to. I'm going to share a little bit about what's happening there and what to look for this year, and some of this was touched on earlier as well. This is the quote I shared earlier, and I just wanted to connect the two concepts. This is the chairman of the US SEC saying not just that he thinks capital markets are moving on chain, but that he's going to make capital markets move on chain, and he's going to move things out of the way to make sure that that happens. So I expect that he will be effective as the person who controls the regulations. How does that look? Stable coins, people are probably familiar with. They've been sort of unavoidable. I'll tell you that when Bitwise got started, they didn't exist. We got started over on the left of the x-axis there. They're just dollars and currencies on a blockchain, settling, clearing, being held on a blockchain. They've grown tremendously to over 300 billion now, and you may recall the quote from Secretary Bessent earlier predicting that they will increase 1,000% in the next 4 years. Tokenized securities are the sibling of stablecoins. Similarly, it's a traditional asset being represented on a blockchain, much like stablecoins are that for currencies. Tokenization is that for different types of securities. I worked in tech before Bitwise a long, long time ago. I'll tell you that these are the types of charts that you love to see in business and are very hard to find in the wild. In fact, it's now over 20 billion in assets, and it's across many different types of asset classes. It's earlier in its journey, but the adoption is tremendous, and I'll share a little bit more color around this. And then the third concept to look for in capital markets coming on chain is vaults, which is even more nascent. They were invented in 2024. You could think of them the way you would think of a UCITS. A UCITS is a commingled vehicle that people can invest in or redeem out of, and the vehicle implements a strategy on their investment. A vault is a commingled pool. It's a smart contract instead of a fund. People can invest in or take their money out, and a strategy, Bitwise manages strategies for vaults, is applied, except that it all happens on a blockchain. So these are three elements that are growing rapidly in the on-chain capital market theme, and some headlines. X stocks is tokenized equities on Kraken, who I believe is a sponsor of this event. One of the large exchanges in just 6 months has passed $28 billion of transaction volume. Janus Henderson, who people know, the traditional asset manager, has tokenized a CLO fund and taken $1 billion of inflows through the tokenized version of the fund. I think I accidentally have the same slide here. Yep. This is maybe a more surprising example. Deal, some of you may know, valued at $10 billion. It's a payroll provider, and they have integrated stablecoins to allow companies to fund their payroll more quickly and employees to receive their payroll in stablecoins. Why might they do that? Maybe they would rather not have their money in a bank account. They'd rather have it in a wallet. Maybe they live somewhere where the banking services are not exceptional. A variety of reasons. Whatever the case, these busy people viewed it as valuable enough to integrate. Facebook, now Meta, recently put out an RFP to revisit incorporating stablecoins into their products. One of the, I think, most important things about capital markets coming on chain, which this slide is meaning to convey, is that it is resulting in usage, in volumes, and in value creation. So if you believe that stable coins have a role in the future, then you implicitly believe that Ethereum and Solana are useful, because stable coins don't exist without Ethereum and Solana. If you think that equities or bonds will be tokenized, then you implicitly believe that Ethereum and Solana are useful, because you can't tokenize things without a blockchain. Revenue is generated as a byproduct of this activity and is in meaningful size across many different crypto blockchains at this juncture, some of which are referenced here. And then, of course, at the top are some companies, and I think Tether's at the event as well. So Capital markets coming on chain is important in part because it's bringing revenue and usage and users and activity onto these blockchains that you've heard about for a number of years, and is helping drive them and drive value into the platforms. And then just in the last 3 weeks, these two headlines, BlackRock buying Uniswap tokens. So BlackRock beat you to it. They bought Uniswap tokens on their balance sheet before you did. And tokenized their first fund and announced that they will be tokenizing all of iShares in the next 3 to 12 months. And Apollo buying about 10% of, I referenced vaults before, the leading vault platform, and announcing that they'll be offering vaults on their products. Things are moving, capital markets are coming on chain. It's happening much faster than we're used to in crypto. And then the third driver that I expect, again, in my objective here, which is to give you a sense for where we are, what you might see happening this year, because this year is going to be so different than the prior decade of crypto. I think the third thing, which may seem a little crazy, is that AI and crypto, I expect, will manifest more and more this year. I think that they're going to manifest more and more this year, not because of crypto, but because of AI. I've already spoken to a few portfolio managers using AI in their work. It's sort of an unavoidable topic. And I think a key thing about AI is that it's accomplishing a quarter's worth of roadmap every 2 weeks. So things that we would think might take 6 months to happen are taking 2 weeks to happen. And I'm just going to give you a very short 2 examples here. This is a tweet from a developer. People may know ClaudeBot. It's now called OpenClaw. One of the most popular. It is actually the most popular open source project in history that allows people to set up agents on their computer, their local computer. He asked the agent to make him money trading, and it made him $150,000 trading in crypto. It did that without his direction. He didn't design an excellent algorithm. He just deployed the agent. The agent found it easiest to interoperate with opportunities on public blockchains. And then the second tidbit I thought I'd give you is Stripe, if you're familiar. I imagine many are, now valued at over $100 billion, a giant payments company. They've made multiple $1 billion of acquisitions to enter the space. They will be launching a public blockchain in about a month, and in their annual letter forecast that the amount of payments flowing between agents will rapidly overtake B2B and P2P payments, and that they will have to happen through blockchains. It's not a crypto company. It's not a crypto asset manager. This is a payments company that would probably rather not see the world change because business is going very well. So those are the 2 illustrations I thought I'd give on AI, but I expect that we'll be surprised by some of the things that manifest with AI this year. Okay, zooming out. I think there are many times when we talk about crypto that it feels sort of very unfamiliar and very unique, but I want to offer you an analogy that you've seen this story before, in fact, and the analogy that I want to offer you is the internet and e-commerce. The internet rolled around. It started out as an unserious Wild West. In America, and I'll give some American examples, beloved 100-year-old institutions looked at the internet and e-commerce and decided if they thought it was worth spending time on and what to do about it, and different fates resulted. In America, Sears, one of the most beloved retail institutions, is no longer, Circuit City no longer, and conversely, Walmart and IKEA turned it into a new leg of growth opportunity for their businesses. Walmart recently crossing $1 trillion of market cap has really benefited from e-commerce. Of course, with the introduction of the internet and e-commerce, there were also new companies and businesses that became possible. And everyone is familiar with Amazon and Shopify, 2 of the most valuable retail businesses in the world. And then also on the right, things that you wouldn't really have imagined that are sort of uniquely possible because of the internet and e-commerce. DoorDash, Twitch, where people are paying streamers and buying digital goods, GoFundMe. These are sort of uniquely possible and sort of quite different from in-person retail. You're going to see the same thing in crypto. I think every respected, beloved institution has an opportunity to decide if they want to invest energy and resources into capitalizing on this space or not. And you're going to see new players, again, Kraken, a sponsor here, already a $20 billion company. You will also continue to see this. It's never gone away in the story of technology. It's not going away for crypto this year. Once my presentation with you ends, it doesn't mean you walk out of the room and everyone will think it's a genius, no-brainer idea. You know, there's an Oxford professor who doubted the merits of electric light. There was a bank executive who doubted the merits of the automobile over the horse with high conviction. And of course, Paul Krugman from the New York Times doubting the role of the internet. So I expect there will continue to be people who question whether this space is valid, whether all of the names that I've shared are foolish, and whether there's real merits here. But I think that that is one of the reasons why there's so much opportunity for investors right now. It's not yet completely obvious to everyone. You know, I'm here with all of you, and I'm trying to show you a picture that takes a fair amount of effort to pull together. You see the picture, but the average person, if you go back to the office and you ask them what they think about crypto, they'll say, "Isn't it down?" And they'll be happy not to think about it for the next 3 months. And that means there's opportunity for investors. Once everyone agrees, it's a less interesting opportunity, generally speaking. And so there's a ton of opportunity, and I think that's why you're seeing so much that I've shared with you. I think that the high level of this moment is that we're moving from an early adopter esoteric thing into a very mainstream thing where names like the names in these slides are the players in the space. And then, of course, the message that I started with, which is you've seen crypto for many years, the beginning is over, and we're entering a really exciting new chapter. Thank you.
Well, thank you so much, Hunter Horsley. Thank you for taking the long trip, the long flight, and bringing us your perspective from the US. Thank you so much.